Next topic, hurricanes Harvey, Irma, and Marie shaping the future of marine insurance certainly is topical, and it'll be led by Nancy Poppy of Willis Marine, Willis Towers Watson Marine. Nancy is Senior Vice President of Willis Marine, is North America's practice leader for yacht practice. Based in Fort Lauderdale, she's responsible for building the niche brand and develop its client base in the delivery of quality yacht risk management and insurance brokering to North American yacht owners. She's got her degree from Hofstra University, and she's going to run this panel, thankfully. Ladies and gentlemen, Nancy Poppy.
Can you hear me okay? Everybody? Okay. All right, here we go. He promised me green button means go. What am I pointing it at exactly? This is not going to go well if I have to pay more attention to the button. What am I missing? And I would like the second slide, please. Yay. All right, this is the big opener. In the beginning, we could debate who actually created or started the world, but I think we would all agree that it was the devil that made insurance. I don't have a prop, but I always have a bad joke. So today we're going to talk about the impact that the three recent hurricanes, namely Harvey, Irma, and Maria, will have on specifically on the boat insurance marketplace. But first, a word just about insurance kind of on a worldwide basis. This slide is a little bit dated. It represents the largest natural catastrophes in the world between 1970 and 2011, so missing is certainly some more recent, but it gives you the overview that insurance is really a global product or financial solution. So we didn't have Harvey, Irma, and Maria. We had Andrew back in 1992, $26 billion. We had Francis, Ike, Katrina, Rita, Wilma, all totaling $213 billion. We had an earthquake in Haiti, a tsunami in the Indian Ocean, Superstorm Sandy, earthquake in Japan in 2016, the largest natural disaster in 2016, and then of course the hurricane in Mexico City, the earthquake in Mexico City last month. Large global insurers spread their product, their capacity all over the world. Insurers reinsure themselves, and reinsurers reinsure themselves. So a large function of rates or rating or premiums starts at the very top. So when a reinsurer increases its price, it passes its cost along and ultimately trickles down to me as an individual buyer of insurance, where I find out that I'm paying higher premium. That certainly sounds like bad news, but one bright spot is in specifically boat insurance. Of all the costs of running a boat, I would venture to say that the only one that's actually gone down consistently over the past 12 to 15 years, is the cost of insurance. Record low insurance rates, and I hope we've all enjoyed them. But the good news is boat insurance will still be available, unlike what happened in 2008 when financing dried up. Insurance isn't going away. It's just we're going to talk about some of the changes we can expect to see, but nothing we can't all get through together. So now I would like to introduce the panel before we kind of start our discussion here. Craig Dunstan is the Yacht Underwriting Manager, Private Client Group of AIG Consumer Lines. Laura Sharad, everybody from friendly face Laura Sharad, is the Senior Vice President with Falvey Yacht Insurance. And Tony Beveridge is a staff surveyor with Braemar Yacht Services. So panel, what can boat owners expect? Will my premium go up? How much will it go up? Craig?
That's an interesting question. And nobody really knows just yet what's going to happen. You know, we've had a lot of boat losses in the industry, and certain carriers have planned around how it is that they're going to insure boats. You know, they've managed their aggregates in different ways. For example, you know, AIG, who I work for, you know, our aggregate that we've managed, you know, over 10 years I've been here, has been to, you know, insure boats in Florida, in the Caribbean, and throughout the country as well as throughout the world. You know, we've never been the cheapest cheapest company on the block. We've never had the lowest deductibles. So fortunately, how we've planned over the years, we're still going to be able to operate, you know, how we've been operating. Will there be some changes, which we'll talk about, you know, in a little bit? There'll be some changes, but nothing drastic, at least from us. And then there's other carriers that may have to have some changes because their rates were too low, or they may not be doing business anymore, and there may be other companies that'll come in and do some business.
So that represents AIG kind of in the U.S.
Correct.
environment of boats.
From a
insuring.
U.S. standpoint.
Right. And so, Laura, what do you see coming from kind of the international outside of U.S. marketplace?
Yeah, so there's a lot of chatter going on right now because everybody's trying to digest exactly what just happened. You know, we had Harvey, which was basically non-yacht event. We had Irma, which was a big yacht event. And then Maria, and those numbers still aren't coming in yet. So, I mean, I think I've heard estimates on the losses for the three storms anywhere from $200 to $400 billion. And a lot of that is a yacht event. So it's as far as a Lloyd's security, it's a really major event in the Caribbean. As far as the U.S. is concerned, I don't see it making that big of a difference. But as Craig was mentioning, there's been a lot of carriers coming into the market over the last few years. And you guys, yacht brokers move around a bit, right? Well, so do insurance company underwriters. And so when they move, they go to another place. They don't have a book of business, and they go in and they go, I'm going to write the business that I wrote over there. So, well, how are you going to do that? You're going to lower your rates, right? So they go in, they lower the rates, and they start writing business. Oh, well, then this company wants to come in, and they want to keep that business. So everybody has been doing this for about 10 years, where the premiums have been going down, and they're not substantiated with what's actually happening in the marketplace as far as the costs involved in paying what we call attritional losses. So that's lightning. That's, you know, somebody runs into something. That's, you know, injuries, things like that. Without hurricanes, the Lloyd's loss ratio, I got it right here, is 120.81% before they pay their reinsurance costs. So that's without a hurricane. That's without anything happening to cause a claim to go into a reinsurer. They're still not making money. And you say, well, then why are they doing it? Well, there's a little bit of ego involved, I think. Yachts are a market that companies don't like to give up on, and so they tend to want to stay into the business, but it takes a few years for insurance companies to finally get beat over the head long enough to say, you know what, let's not do this yacht insurance thing anymore. Let's just get out. And so a few of the Lloyd's securities are going to leave the marketplace. They're going to say, we're done, we're out. And that's in the small boats. I mean, Nancy, you can talk to the large yacht market much better. I don't think this was a large yacht event for you. But it was a very big, large event for the middle market.
Yeah, I was going to say, you know, this is going to be, there's going to be a big difference in your boats, say, under $5 million in value,
yeah,
where you're going to start seeing differences, you know, and, you know, less carriers to be able to insure them, you know, higher premiums at renewals versus the, you know, north of $5 million where in value those boats really did not get, you know, hit.
Yeah.
And there probably won't be any major price changing in that sector for, you know, at least another year or two, unless the reinsurers that Nancy spoke about decide that they're going to then start increasing their rates, which is going to then have to trickle down to us, you know, taking our rates up a touch.
And that's a great segue. Besides premium, what other changes might we be seeing in the year ahead?
So there's certainly, you know, from every carrier is going to have a lot of lessons learned in this, you know, and I'm seeing the losses coming in that we've had. And where are we going to find change? I think changes are probably going to be in having more named windstorm deductibles. A lot of small boats, they all have them, but some of the bigger stuff, your $1 million, $2 million boats, the market, because there's been so many players in the market, everybody's trying to chase the business. So how do you get the business? How's that insurer and that underwriter going to get the business? Well, I'm going to be cheaper. I'm going to have a lower deductible than the next guy. Try and find some better terms and conditions. Where now, hopefully, those deductibles are going to be applied, and those deductibles aren't to hurt, an insured and say, you know what, you're going to be on it for the first 15%. Our philosophy at AIG really is much more risk management. If the insured has a deductible, it's going to make them think a little more. You know what? I need a plan. I got to do something because I don't want to be on the hook for 15%, of that loss. So I think that's probably where the changes will be most. Just being more diligent about, how business is written and working with customers to recognize that, plans are needed.
Yeah, going back to where you started this, which was, all of the expenses in yachting have been going up over the last 12 years, except for yacht insurance. So if you compare what your client was paying 8 years ago, he was probably paying twice as much in premium as he's paying today for the same amount of coverage, with lower deductibles today than he had then. So there's going to have to be a little bit of shock involved, I guess, with some of your clients to say, I don't understand why my premium's gone up. And that's why we're here today, is to kind of talk about that. But just to give you all the understanding that we're not trying to say doom and gloom, but I've had this happen a number of times. Somebody will be coming from the Northeast and they'll look at our premium down in South Florida and they'll say, you're just stealing from us. I'm not talking to you. Wham! And then about 2 weeks later, hi, I'd like to talk to you about that insurance premium. Because it's kind of a shocking thing when you look at our numbers versus some other places in the country. So anyway.
I think we talked about this as a panel. We'll also expect to see return to what an underwriter would call more fundamental underwriting practices or diligent underwriting practices, asking for the plan, expecting that they can put a higher windstorm deductible on a policy, what we call north-south warranties, saying you'll pay less premium if you agree not to go south of a certain point during a certain time. Consequently, you pay more if you want to go south of that point in that period of time, the windstorm season. And so we'll expect to see that, I think, across all sizes of boats.
Yeah.
That we.
Part of the problem is the wind hasn't blown in a long time, down here, and the economy's turned around. There's a lot more boats. There's less yards, and just less thought process on what I need to do with this, $1 million asset that's only a 40-foot boat. Something needs to be done with it, and people are not preparing. We've been always trying to work with them to prepare them for this event, because we know we're going to have insurance losses. We're going to have hurricanes. The wind's going to blow. We're going to have to pay, and we're prepared for that. And it's our job to try and get the insureds as prepared as possible. And that's what I've seen from losses, that it's the ones that were not prepared, didn't have thought processes in place. To try and figure out what they can do to where they're going to have the boat hauled.
And there's a difference between that and having to change your plan. So I would caution to, be sure that you're not, well, there are certain carriers that will mandate that plan be followed to the T. And that's just not practical, from what I found in the marine community is, number one, the storm may be coming right where you planned on putting your boat, so why would you want to put your yacht there? You may want to take it north. You may have issues with, a bridge locks down or something that causes an issue with your plan. So what I'm saying, what we're seeing is people aren't acting soon enough on some of these plans, and they're asking our opinion on what they should be doing with their property. And that is the wrong thing to be doing. They should have it mapped out and plan A, plan B, plan C is always a good way to go. But yeah, we've seen a lot of those phone calls lately, I'm sure, where they all of a sudden, oh, well, what should we do? And that's just wrong.
Thank you, guys. So we're all, everyone in this room, a buyer of insurance, whether it's a home, car, boat. And what's the first thing we say when our rates go up? We get that renewal bill in the mail. Why me? I didn't have a claim. Or in our case, in the boating world, well, why me? The segment of boat that I own didn't sustain a ton of losses, or perhaps no losses. Why is my premium going to go up? Laura?
Well, kind of touching on that, again, with the Lloyd's marketplace, they've already been, hurricanes are the #1 cause of loss in the world, as far as boat yachts, and that's boat U.S. statistics. But all of the other losses that are involved in our yachting business, the Serene sitting on the rock in Egypt, that's a $40 million claim, I've heard. So there's other things that happen in yachting that cause premiums to be affected. And then realize that yacht insurance isn't the dog. It's not the tail on the dog. It's the flea on the tail of the dog on the size of the in the marine insurance industry. So I mean, we really don't have that much at risk as far as the world insurance place is concerned, but the outside effects of the reinsurers will dramatically alter what we're able to say, and that doesn't happen until February 1st, so we'll know more then.
Did you have anything else, Craig?
No, I think that was well put.
So this next one's for you then.
What's this?
We haven't had a major wind event in South Florida or the Southeast since 2005. You guys have been collecting premium all this time, filling your war chests. Where's all that money gone? Why don't you have enough money for these events?
You'd be surprised. It's very difficult to make money in yacht insurance. So we're not filling our war chest. We're paying claims out every day, and this now happens to be an event that we're paying out a lot more in claims than your typical year. So year over year, and every carrier is different, based on what it is that they're writing and how they're underwriting and their overall loss history. But it's a line of business that's difficult to make money in. We don't make a lot of money, so we're not filling up a war chest and moving on year over year and being ultra profitable. So,
anything to add?
Oh, well, I'll just tell you all a quick story. So our charter fleets, we had a very large renewal come up January 1st, and another carrier came in and cut our premium in half in order to insure the moorings this year. So we sent them a case of champagne last week.
And a thank you note? But that's a great illustration of how the boat insurance market has operated for the past 10 years. An underwriter wants something, they go get it, and price is usually their leading tool or arrow in the quiver. So we've talked about insurance. You buy a boat, you buy insurance to protect you from the big claim. But Tony, is there anything that you can do to avoid the big claim? Is there any value or merit to buying a boat that's better built than, say, another boat?
There is, and as brokers, you'll understand this when you get a client comes to you and says, "I have a particular budget to spend on my next acquisition." So he's effectively put himself into a position in the market where he's going to have boat A or B to choose from, and you're going to cut your cloth accordingly to provide him with that boat. When it comes to that boat being able to sustain damages, obviously that's reflective in its build cost. If you've got let's not talk sports fish or the likes, but say you're buying a moderately sized yacht, you've got the choices of building it in glass fiber or aluminum, perhaps a classic yacht in wood, or you're going to go for steel. The construction costs are remarkably different. So you're going to sell him what he can for the best price that he can afford. The more expensive a yacht, the smaller it may be for him, the better constructed it is. But the better construction practice will mean that when it's subjected to these incidents, it will at best suffer least damage, or be slightly more expensive to repair to get it back into the condition that it was. Whereas the lesser built yachts, let's not use that term, they're all built well, but the less robust yacht is built to a price which could suffer catastrophically in a simple event where it's collided with or crushed. And you as brokers understand that, so you're really pinched in providing the vessel to your client, but you understand if he can afford just that few $10,000 more on what he's buying, when he comes to an incident like this, your investment pays off by having a better founded boat to take out there on the water.
And Nancy, I think that also comes into play with some of the insurance aspects of as the fleet grows older. So when you're getting over 10 years old, the older boats are going to be affected, I think, in underwriting guidelines for a lot of companies because of the cost of replacement, the cost of repair as related to the aging out of the boat.
But one thing that is different between this sector of the marine market and the commercial side, on the claims process alone and on the claims submission, I see, having dealt with both sides of that coin on the commercial side and on the leisure industry, the costs can become astronomical for somebody's pride and joy, where they've painted it in wonderful metallic paints. They want the best AV equipment, which has suffered a loss. Whereas you go to the commercial side and they just want the thing repaired as quickly as it can be to get it back into commission. And so on the commercial claims side, they're really carrying my perception is that the commercial side is really carrying the luxury market. I might be wrong in this. For all the high premiums that are being paid, as perceived to be paid in this industry, the commercial guys, they have large losses, but as a side-by-side comparison, the cost of a turbo for a commercial ship, that would just be it. You wouldn't have to worry about removing interferences or pianos or painting this or getting it back to the condition that it was in a spectacularly fabulous engine room. So the costs for a loss in this industry can balloon remarkably.
A small loss is expensive, whether it be, hit the side of the hull and then you have to repaint the entire hull because you have one little chip and everything needs to match because it has to go back to being perfect. So it's tough. Lightning losses are really tough. They fry all the electronics and you have to buy all new electronics. So a simple lightning loss can cost $300,000 on a fishing boat.
All right, panel. So now that we can look in the rearview mirror at the Harvey, Irma, Maria storms this year, what have we learned? Tony, have we learned anything?
Planning for these events is paramount. Just assuming that since the hurricanes have always gone off into the Atlantic previously and they're going to do it again this year is no hurricane preparedness plan. You have to understand that there are several ways that you can safeguard your asset, as we term it. It's your pride and joy, but your asset is that you can take it out of the water, put it into a shipyard if you're lucky. You can put it into a hurricane hole if you've got the means to take it someplace sheltered. Not so much here in South Florida. Eventually all the mangroves have been pulled out and they've put condos in their place. Or you double up, triple up your lines and put it into a safe marina facility and hope that the marina will withstand the force of the storm that's coming across. A Cat 5, virtually nothing is going to survive. Tropical storm, you could be lucky, and you suffer marginal losses, which, as Greg says, it can be quite a substantial claim just for paint damage if you get 3 boats all raft up against each other. But your preparedness should be look at where you can take it, how you can protect it, and do your utmost to try and not have a claim in the first place. More fenders, put it into a safe place. If you can put it into a sheltered dockage facility, fabulous, but they don't exist. There's not enough of those around for all of the boats that are out there on the water. So really work with your insurance company to try to not have a claim and put yourself in that position of being in the game as far as not causing a loss. So don't just abandon your responsibilities, but really endeavor with your captain, or if you're an owner captain yourself, understand how to make your boat safe so it won't suffer a catastrophic loss.
Yeah, I think most of our insureds don't want to have a claim. I mean, honestly, it's not a fun experience for anybody. And even with the best of the carriers out there, it's still no fun. And hurricane losses, all the mess that comes with it. There is going to be some costs involved that are probably going to be going up as these policies renew and those deductibles increase on the windstorm. So I say lesson learned is be prepared. And don't have a Cat 5 storm anymore, okay?
Blow hard. And Craig, what did you learn? What have we learned?
We've learned, it's be prepared. I've talked to many brokers and customers and risk managers and through, when these storms are coming through, and they weren't necessarily prepared for the storm. And that's really what needs to be understood, and work with your insurance carrier to figure things out in advance, to hopefully, next time there's, the storms come through, that the losses, are not as extreme, and then, premiums aren't going to go up. So work with your customers to be prepared.
One is to enact your plan early.
Yeah, we actually had clients who were in South Carolina this year who were calling to ask, is it okay because the storm is still 3 days away? Are you still going to pay the hurricane haul-out coverage? And I said, do what you got to do. Basically get your boat to a safe place and it'll all work out. And yes, we'll take care of the hurricane haul-out because the projected path was to South Carolina at the time. And we'd much rather pay a hurricane haul-out than pay for a total loss, believe me. So.
Yeah, so I was going to say, that's, under the most policy forms, has this provision that will pay the owner a certain amount of reasonable expenses that they have to go through to move the boat, haul the boat, whatever it may be. And, we want to pay those claims. At AIG, we set up a separate claims team just to handle those claims because we want them paid immediately. We have other things to deal with in the sense of damaged boats, getting surveyors out to boats, finding shipyards to repair the boats. So we welcome those $3,000 and $4,000 claims because you had the boat hauled out and the boat's safe. So that's understand your policy and understand what actually your policy is providing you and the customer.
Good point.
Anybody have anything else to add? Any questions?
I've got customer next. Well, could you speak, or any of you willing to speak to
Okay.
what we think? No, sorry. Normally I thought. We anticipate that there's about a 30% loss. I think we heard in the charter fleet down in the BVIs. So I anticipate that a lot of the hardware and navigation equipment's going to be stripped off of those boats and then potentially resold. And then what happens to the hulls afterwards? Are we going to see a bunch of hulks come out on the market that we have to worry about? They've been damaged and we don't know what the results are. That's sort of a survey question and a sort of a what happens to the vessel after it's been declared a total loss from the insurer's standpoint? Does it get turned over to the insurance company and they resell it, or, that sort of thing?
Well, go ahead.
It's, our claims folks will handle it, and the boat does need to be disposed of, and how that's done, is probably going to be up to claims and the surveyors and the locations that, wherever that boat may be. I anticipate that will be an issue. You might be able to speak a little bit better to that, because I'm on the underwriting side where I don't deal in all the day-to-day claims activities. But I anticipate that'll be a bit of a problem.
Yeah, as far as, it goes on the extent of damage to the hull. If you've got minimal damage to the hull and it's repairable at cost, excuse me, because of what Craig touched on about the cost of electronics and the likes, demasting, if you've got a minimal hull damage, but you've reached the total loss value of the vessel, or the insured value of the vessel, the underwriter's going to turn around and say, well, why repair it? Let's just replace it. So effectively, to somebody, an interested party, you're going to have a vessel, to all intents and purposes, that is reusable. But who's going to pay the cost for that? If a shipyard or a gathering of interested parties comes together to salvage all of those yachts, then you may find that there will be some more boats on the market that have got history, a black history, as some people like to refer to it as. But that doesn't automatically mean that you're going to have a vessel that's not seaworthy or been repaired properly. That's really the buyer beware. Get out and find the history of that vessel that's being sold at a particular cost. There has to be history behind it if it's a deal you think you can't refuse. With AIS and boat history, you can find out the history of all the vessel casualties. The IMO number or the hull number is always with that vessel, so you can find out what the history is. So really, yeah, there will be boats out there.
Yeah.
You have to determine how badly it was damaged. You need the services of a good surveyor to be able to identify what the pitfalls are in trying to carry out a repair on an entire hull. Or it might just be a puncture. Cause the thing to sink, the vessel is intact, you just do all the electrics. Maybe it was my voice.
Yeah, I think it's just important that, if you've got buyers that are buying boats that, have known issues that, were damaged in a hurricane, it's going to be important that the boat is surveyed and the hull is, checked, and, what surveyors do what they do. And underwriters like ourselves, we're going to be asking for surveys, of boats. Right now we're asking already, if they're buying a new boat, or a new used boat, was there any damage? Did you have any losses? The questions have to be asked. Although there's hull ID numbers that can do some tracking, in the marine insurance industry, it's the questions, it's utmost good faith that you're providing us with factual details. We don't have, that hull ID number can't be put in a system like a VIN number on a car that gives you the entire history.
Yeah, there's no Carfax for boats, right? So.
Sitting in the corner.
But it's for boats, I'm guessing it's voluntary because no? Okay, tell us more then. All right, we'll talk later.
But from a loss standpoint, it is. There's insurance companies don't report in marine losses like they do for auto and home. From what they call a clue reports, marine losses typically don't show up on that. So you just have to ask the question.
Right.
We've got a whole ID that's been declared a total loss by one insurer, and we go to get it reinsured. If it's sold and then put out for insurance, is there going to be a premium charge?
A lot of companies will not insure vessels that have been declared total losses.
Okay, that's the question.
Questions? Anybody?
Okay, so I had a boat, let's say a friend of mine, the boat sunk at the dock. It was insured with it was state titled in Florida. That was declared a total loss. The insurance company settled for him for a certain amount of money or gave him deal, they give him less money and he keeps the boat. But what surprised me, the boat did not have a salvage title. It was state titled, but the title was clean when he resold the boat. So I don't know if there's a history that stays with it. Like, are you saying that the hull number would show that that boat had been totaled before?
According to your colleagues in the back of the room, yes.
I'm sorry?
That's conflicting with what we're saying up here on the panel. I think that the first step I take when I go on board a boat is first of all I find out that the boat I'm actually looking at is the boat I'm supposed to be, and I identify the hull number. If there is a list of constructive total losses of hulls out there, I'm hoping that that hull number that I'm looking at isn't on it. Is there a database for that?
No, not that I'm aware of. That my claims folks, they're not putting hull ID numbers into any systems.
Okay.
But it seems like somebody has something.
And I think from the losses that we've seen these last storms, then that could very well be the case. Maybe a database is being formed as we speak of the losses that were suffered down in the BVIs and St. Martin and the likes. So watch this space.
Yeah, no.
Here, wait.
Just to address what you said, the state of Florida didn't have a total loss, so the vessel was a total loss. There's only a couple of states in the whole country that actually provide negative brands on boats. It's not like the car industry. So the state of Florida, for example, will show that the previous owner was an insurance company, and they'll issue a clean title to the next owner. The state of Florida does not acknowledge any sort of negative brand. We're working on it. There's an actual act out there to change that. And as far as a collective list, there is a company. This is not a shameless plug. I'm just addressing the topic. But we've been around for 12 years, and so we work with a lot of insurance companies in the National Insurance Crime Bureau. So if you're a member of that, then all the total losses are in a collective report. Otherwise, a lot of the boats, to your question, what happens to the boats, they do turn up. There are different groups that buy these total loss vessels and put them back on the market as clean histories. And so, salvage auctions and things like that. And that's the kind of information that's going to show up on those collective reports.
So for information purposes, you are...
Boathistoryreport.com. Thank you.
We planned that.
Any other questions? Can I ask something? The last time I saw a lot of sailboats up on the beaches was Hugo.
Yeah.
And is that an event that we can draw a comparison to as far as the market response to what happened with Hugo and what happened to the market after that?
Well, I think Hugo and then Andrew also, because Hugo was 1989, Andrew was 1992. So I think that the market had never seen a storm like Hugo before, right? And so it was digested, but it wasn't really reacted to. And then Andrew happened, and it was reacted to. And a lot of companies just said, we're out. We're not going to do yacht insurance anymore. And so there was kind of a lack of carriers in the marketplace for a while after Andrew. This isn't that event for our industry. There's a lot of carriers still out there. It's just that there's a correction needed, and that's all we're talking about.
All right. Yes, David.
We see a lot of dockage agreements that have windstorm addenda, and the owners are basically signing their life away. They're saying, if there's a storm coming, you can do whatever you need to move our boat, and we're not going to hold you liable for any of it. And I think I know the answer. We always push back, but what kind of exposure do you have if you sign a dockage agreement like that?
He can answer that.
We dealt with that, when this storm was coming through. We had a lot, last minute, please add us on as an additional insured, because we're taking our boat out at this location. At the end of the day, we want those boats taken out, so we agreed to do it. But the boat yards are essentially shifting any responsibility. Now, when it comes to a storm, I can understand that to an extent, that a boat yard can't be responsible for all those boats in their yard when the hurricane comes through, and then everybody's going to then sue them because the boat fell off the blocks. It's not really realistic. It's the boat owner, it's us as the insurer of the boat that are responsible. It gets into going a whole nother topic when the boats are in the yard and having work done on it, and those yards are then trying to push back the insurance, to to the boat owner. But for storms and such, it's just the way of life. It's the way in which everybody's putting their contracts together with the attorneys that they're working with from a commercial standpoint. So we're just sort of put behind the 8 ball and have to agree.
Yeah, I have another question. I've had a few questions from some of our boat owners, and they were wondering that if there is a very significant loss on a boat, and maybe it's not enough to total it out, but it's marginal, it's quite close. Obviously, the boat owner at that point would like to have a cash settlement and be able to walk away from a severely damaged boat that may take months or years to repair or replace. What is the insurance company's point of view regarding coming up with a amicable settlement with those types of clients? Is this a negotiated amount where you start getting very close in a percentage of the replacement value for the repair cost, or how is that handled in your firms?
It's really a case-by-case basis, honestly, and that negotiation really does depend on the circumstances surrounding the loss. So say, for example, you're down in Puerto Rico right now. There is no place to repair a boat right now in Puerto Rico. So is the value of the vessel substantial enough where you can take it somewhere, or is it just one that you say, okay, we're going to do the CTL and we're just going to go ahead and we're going to, our owner's going to be happy and we're going to, resell the boat or something like that. So there's a whole lot of negotiation that happens not in a vacuum. I mean, there's a whole lot of factors all the way around that can answer your question, but specifically, I wouldn't be able to say. Some policies actually say in them, if the repair cost exceeds X percentage, then we will deem it a constructive total loss. And
it's also, too, it's not based on the replacement cost of a boat. So policies are typically agreed value for the most part, or an agreed value policy. So if you have $1 million of coverage on your boat and it's $3 million to replace, that $3 million replacement cost doesn't come into factor as to when we would or wouldn't, total it out. It's going to be based on a general percentage of what the costs are to repair it, when then you determine as to whether or not it's, a total. And that's negotiated really with the claims folks. Some policies have it where it's at 60% it's total loss, or at 80% it's total loss. We take the philosophy we want to be able to repair the boat for the customer, so we don't have a percentage, because some people love their boats and they don't want to get rid of them and they want them repaired at all costs. And if it becomes reasonable that you have $1 million boat and the claim is $900,000 and the customer really wants to keep it and get it repaired, we're going to work with them to get that done. I've had a situation where we had one that we actually paid more than the agreed value on the policy, because they really wanted that boat back and we wanted to get them back into that boat. So we took all measures. It happened to cost more, but at the end of the day, the client was happy.
We have one more question back here.
I know in the dealer insurance that not only just the damages, but the value and also certifications can determine if a boat, it'll depreciate the boat, which can signify a complete total loss. Does that also play an effect? Like if a boat can be repaired for $500, but RENA won't certify it again, and it's not brought to the same condition as when it was insured, then that could be argued that it's a CTL also. Is that correct?
Well, I think that falls into diminution of value, and some of the policies do not cover that. So whether or not, if it was RENA and it was RENA before, it would have to be brought to the standard of being RENA after the loss. So that, you have to bring it back to where it was. But as far as the diminution, that may be just, hey, I heard the boat had a fire, and that just may be a marketplace aspect.
Any other questions? You have your chance. You have these experts here. This body of knowledge. Oh, okay. Inspired you today.
Are there any thoughts being given by the industry for systemic change? Because we had 2 boats down in Puerto Rico, one in Fajardo and one in St. Croix, and it's really hard to figure out what to do. I mean, you know, when you get this storm and you don't know exactly what it's going to do. And I'm thinking that perhaps there's something that can be done by the industry as a whole to kind of help lay out the plan when something like that occurs, something outside the box, you know?
I think there's going to be a lot learned from this storm, and I think there's a lot more to learn. You know, I mean, I think we'll know more in 3 months than we do right now from Irma particularly. My gosh, 187 miles an hour for 3 straight days with 225 mile an hour gusts. I mean, the Atlantic's never seen a storm like that.
You know, the industry needs to stop driving. It needs to stop just being a price-driven industry. That's what it's come to, because there's so many carriers in the market, and everybody wants to write business, and all the underwriting has kind of, I don't want to say gone out the door, but a lot of it, and that's where the planning and carriers need to kind of stand on their own 2 feet and make the decisions, and not only make decisions about, oh, we want to build a book of business. It's we want to work with the industry to have good insurance at reasonable prices. Moving forward. So yeah, hopefully some of the carriers that drove price down and threw out underwriting guidelines are going to turn that around and have better guidelines, and that will then help everybody, because then that'll be the norm in the industry versus just, oh, I bought a boat, I got my insurance, and I don't have to think about anything else. Oh, I bought a boat. Wait, we need to think about the severe weather plans. We need to, be prepared. What are we going to do? That's just been talking about. It's all about preparation.
Well, and from the broker side, sorry, but as an insurance broker, I think what the message we hear from the insurance companies, carriers, the prices are at a historic, premiums are at a historic low, and they almost can't offer much more because there's nothing to pay for those additional value-added services that possibly, not possibly, but very likely they could bring based on the expertise and the depth of knowledge and the deep pockets that they have when they're being, filled with premium that they consider to be appropriate from an actuarial standpoint. So, that may be ahead for us.
Mm-hmm. I think yours and Craig's comments, we have one more question here. I think we have time. It's so interesting. Yours and Craig's comments were good concluding summary statements, but where's that hand?
Just one last comment. I come from the insurance industry many, many years ago, and the insurance companies back then, and I think they're still doing it now, cash flow underwriting. So like you said, underwriting goes out the door because they're making so much money in investments and on interest. And then comes the cycle around again where all of a sudden they care about their underwriting losses. So how much of this is, you talk about a correction, how much of this is just the same cash flow underwriting that they've always done?
Yep. Another cycle starts.
Yeah, we will see. TBA.
Gone are the days of Ted Hall and C.A. Hansen.
Yeah.
It's $1 per $1,000, or $1,000 for coverage and all that. Is this a comment or a question?
Quick. We were just faced with the problem, and getting a boat out of the area was going to run either a shipping cost or bringing it out on its own bottom. The shipping cost is very expensive, but there were no ships. Mm-hmm. So there were no ships leaving from St. Thomas or any of the normal ports down there. So you couldn't do that. So you're faced with a $20,000, $25,000 bill to bring the boat somewhere, and you don't really know where it's going, to hire a crew and fly them down and do all that. So my thinking was that maybe there's something structurally that we can do, led by the people with the most at risk, which is insurance, to try to figure out how you can solve these kinds of tactical problems when something like this is known to be coming. That's all. And maybe it's you hire a couple of ships and ship them down there or whatever.
Right,
but,
I understand, yeah.
And help with the evacuation or give better advice or something like that.
Yep.
Can I comment on that?
Please.
The issue, wonderful idea. The issue you're faced with that is these storms are coming off the Horn of Africa, and it takes 8 days to get across to our region at best. So where are you going to have these standby ships on station when they're out in the Mediterranean or they're doing the Southern Pacific route? There's only so many heavy lift ships or semi-submersible ships that can take your client's boats or your boat. So it's like Thunderbirds Are Rescue scenario. International Rescue, give them a call, they'll come and save you. Unfortunately, the logistics of doing that, you just can't have these vessels sitting idle, not doing anything. That in itself is an astronomical cost for that ship owner. But it's a nice idea. I just don't think that the ship owners would be willing to put their assets in harm's way, waiting for an event like this, for perhaps a call from you guys with 3 or 4 small yachts to take out of the harm's way. It's just not a reasonable balance of costs to them.
And on that note, thank you for your time. Thank you, panelists. Thank you for the excellent questions.